Welcome everyone back to the Words of Rizdom podcast. We are back once again for another incredible round table. We're still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. And guest is the right word because as you know with the round tables, we have multiple traders with us today and we're going to go through so many various topics. This is what I've collectively probably, at least over 70 years worth of experience at this table. So we have none other than Charlie Burton, Jason Sen, Paul Scott, and Nick Leeson with us today. Thank you all for being here, gents. I know we're in this cold warehouse. It may be a kidnapping, we don't know. But we'll just throw it out there. Obviously, this is going to be airing in the new year. And with the whole new year, you get the new me, right? That's the normal slogan that people use. Unfortunately, a lot of people don't last, though. They make changes for a month and then they go back into old ways. In terms of a trader who isn't quite finding that consistency yet, what would you suggest the changes they should be making at this point to make 2025 their best year yet or their most profitable year yet? I'll start with you, Charlie.
Well, the first thing I would say is I wouldn't define yourself as a trader by the calendar year anyway. Most people do that. They want to talk about how much money they're going to make each month or each year or, and they define themselves by the year. We shouldn't do that. We should be making the changes now, not in January or whatever, because you're setting yourself up for failure in a way if you're saying, right, I'm going to do this in January. Just like a diet, it won't last. So it's got to be something that you're going to be doing right away. The number one thing I would always say to any trader is forget strategies and all of that stuff. Obviously, you have to have it, but really invest in your psychological side of your trading. Invest in your time and energy in your mindset because you won't make it as a trader. You can have the best technical strategy in the world and you'll still completely mess up if your mindset isn't there. Because as soon as you go through a few losses out there, you're going to get nervous, you're going to hesitate, and all of that mess that's going to come along. So if I can say to anyone, please just spend that time on the mindset. And I guess, and also, sorry, I'm pinching the time here, but also extend your time horizon as well. Don't try and get rich quick off this thing. Just see it as an endeavor that's going to walk with you throughout your life rather than something you're trying to do something within the next 6 months or so.
I love that. Paul, what do you think?
What can I say to that?
Do you know what I mean?
Yeah, do you know what I mean? Yeah, I was going to get there. No, I mean, I'd say the same thing. You just got to... It's not you against the market, really. It's you against yourself, I would say. Because the market will always do what it's always done. The same people are just going to keep playing the game. The rules of the game ain't going to change. But the only thing that you can change and keep a handle on is yourself. And not get too cocky if you get on a winning run, and don't get too down in the dumps if you start to lose. I think just be consistent, do the same thing, stick to the same thing, and when you've found what works for you, obviously we all have different ways of trading, and we've all traded in different ways. If you find what works for you and just keep it consistent and don't deviate and don't change, because at the end of the day, you've got 12 months within which to make money, and I've said to people I've been working with recently, if you had 20 stocks, you want to make 5% on each, you've got 12 months within which to do that. So could you do that across a 12-month period? I would suggest yes. Just keep it cool and try and keep a calm head, as the saying goes.
Yeah. What do you think, Jason?
Yeah, keep a calm head for sure. I'm just thinking because, I struggle around December and January. I mean, for me, the markets that I trade, they usually slow down a lot. August is usually a bad month for me. End of December, 2 weeks before the end of December, I pretty much give up. I know I'm not going to do particularly well. And then you start January and everyone's like, yeah, January, here we go. It's going to be a great year. But you really do have to start slowly because I think the first 2 weeks of January, you'll struggle to do well anyway. You should just find your feet. So, I think start calmly, as you say.
Mm. Nick?
Yeah, I think the guys have encapsulated it quite well. I think, mindset is a key part. There's no point putting that extra pressure on yourself of giving you those dates and those horizons where you have to do something by. We've all worked under pressure in our lifetimes, and we've all had to adjust to that and make sure that we get rid of it. I think emotions are the key, and how you react to different situations. So the more you can detach yourself, I think Jason's right. The beginning of the year is always a little bit tough, while people are coming back and adjusting to how they're gonna trade into the new year. But don't put too much pressure on yourself by giving you those defined dates that I've got to do something this year, this month, or a number that you've got to reach.
Off the back of that, actually, it's a good point you bring up in terms of noticing periods of time or particular months or particular times of the year which you don't really perform as a trader. Is that something you've noticed as well, Charlie, at all?
I'm going to go against a little bit what you said, because I'm more of a swing trader, position trader. So from a day trading perspective, I totally get it. That for me, that period, even between Christmas and New Year, you quite often get some half decent moves on a swing basis. If I'm looking at an intraday chart, then it's the price action is as sticky as anything. Same with August at times. But look at what happened in August of this year. And people always say, I'll take the August off. And then you look at this summer, and there was a lot of movement around in the market. So I'm just quite pragmatic. But again, I'm talking from a swing position trading perspective here. I'm quite open to whatever will be. It could be that the market shuts off in the second week of December, and you might as well just shut up shop and come back in week 2 or 3 of January. But it's not always the case, just like the summer we've just had, where we've seen quite a bit of movement around. So I'm always open to whatever happens. But that's my perspective, and we all have our weaknesses. Some people say, never going to trade on a Monday or a Friday.
Yeah, that was me, yeah. No, I was just going to say that was what I used to do, not trade on a Monday. But I knew people whose Mondays was the best day of their week.
Yeah.
So interesting. How about yourself, Paul?
Well, I always think you might run, different banks or whatever, they might run their business March to March or Feb to Feb or whatever, but your trading year is Jan to December. So basically for me, and I totally agree with you, last couple of weeks in deck, what's going on? Everyone's back-to-back trading. Because it's like, right, you've spent that year making that money. The last thing you want is, end of November, the boss man says, right, what's your P&L? And you're like, I'm up 10 million. Great. The last thing you want is to get to the end of December and he says, right, what's your P&L? Well, I'm up 5 million. You'd much rather spend 300 grand or something like that, just back-to-back trading, just to make sure that you've kept, it's cost you 300 grand to keep.
You're not going to make or break your bonus in the last 2
no,
weeks
exactly.
Of the year,
And
I could.
yeah, you probably could.
I have.
I bet you. Yeah, you got any December stories for us, Nick?
But no,
I can't remember when they were paying our bonuses, but yeah.
I just think you got. I mean, again, I suppose that's a lot of fact that in the retail market, I don't think anybody would sort of really get that because it is a big thing. You don't want to do your bollocks in the last couple of weeks, and I think everyone's just back-to-back trading, and it's just like, right, like you said, whatever's going to be will be. I don't want any bloody positions. I've closed all mine. Whatever happens, happens. But yeah, you do get exaggerated moves, because nobody really wants to take a posse.
Man, the markets are so interesting though, because I think there's such a disconnect between the retail traders and then what happens within institutions or the banks, because they don't think along that side. They don't think about bonuses and how that might affect the bigger players in the market. But obviously this is why we have these roundtables and to thankfully have you guys on to sort of give those insights so people can think a bit differently and see why because people hear about December being sort of a month maybe to take a foot off the brakes, off the gas, or same with like summer, but they don't actually understand the premise why. So that was very insightful there as well. But you talked about having different strategies there, because I know that you're quite a longer term position trader as well.
Yeah.
And then you guys are more day trading, right?
I'd like to be longer term, but at the moment I can't. I'm struggling to find ideas, that I could run for a week or two. But maybe that's just because I do have quite a short term view.
Yeah,
it's difficult to. Yeah, well, for me personally, I trade forex. I try to trade forex, and most of the pairs that I look at have just been stuck in these big ranges for months, if not years. So I'm really struggling to find something that I could put on and leave for even a few days.
You're just going between the ranges each side.
Yeah. Gold has been a good one. I trade gold and silver, and that's a bit easier. You can buy the dips, but Forex I'm struggling with. I will admit that.
Definitely. Have you always been a long-term trader, or have you transitioned to that?
No, I transitioned. I started out as an options trader on equities, but so started out as more of a swing trader, then became at some point in the 2000s going in and then into the financial crisis, very much short-term trading, and then really, I guess I haven't short-term traded since 2016. I guess now really. So, I find it really difficult. Much like you find it difficult to see the longer term, I find it so difficult now to read a short-term chart.
Just perspectives.
You just lose it. It's like, I think I said before, it's like having a saucepan of hot water, and you've got to give it constant heat. And if you don't, it just goes cold. So I can't go into that realm anymore. I find it very difficult, just like you're finding it difficult the other way around.
How about yourself, Nick? Because I know obviously you're very short term. You're looking at specific timings as well. Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, Forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percent, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below, and let's get back to the episode.
I try to just trade the opening bell periods and an hour around that. I don't want to get too involved in the markets. I find that, much as I did years ago, I probably start trading a bit too aggressively, a bit too angrily. So I try and make sure I just focus on that period. It's day trading. I've got lots of baggage that comes with me. Carrying overnight positions isn't something I want to do anymore. So I leave that well behind. Like to sleep at night and close the positions down fairly quickly. But I just, obviously coming from that futures type background, I think that hour around the opening bell conforms more to what you used to see in the pits. There's plenty of liquidity. You're going to get a movement, and if you get it right, you get it right. And so just really focus on that. I think, just to echo some of the things that Jason has said, for me, again, carrying a lot of baggage with me, trading at new highs in the US indices and gold, it scares the life out of me. It's
tough to buy it, isn't it?
I'm not going to buy it. Yeah. So, if you were sat in a pit against me, you'd rate me.
The trouble is, I've lost so much money trying to pick tops that I finally realised that doesn't work for me either. So
exactly.
I do actually just shut my eyes and buy it. But actually, that's interesting because obviously I have a technical approach, but you're mostly fundamental. Yeah. So to have that fundamental approach and be able to trade short term, I don't know how you do it.
I just think it's more forgiving around that period, Jason. If
Right.
if you watch that period, you get more two-way flow. You've got the opening orders.
So you're going on gut feeling, watching price action,
and how
basically.
how it builds up to it, price action, and how it builds up to it. And I think you see, if you go from day to day, you see a lot of commonality. Monday through Friday, especially with the Dow. When
you see patterns and you just recognise them. It's probably something you can't really teach, is it? It's probably just something that you've developed.
It's just because I was searching for that period of the day that's going to be closer. Coming from a floor trading background to then having to look and try and make sense of something that's on the screen, that was the thing that I kind of came up with and focusing on that period. And it is more forgiving. Like if you hit a trend straight off of the bell, it can be painful. But if you if you focus on that period and the price action, it works for me. Not all the time.
I know a guy who used to just trade the open and the close in oil. Probably only worked for 2 hours a day. Did really well. I don't know what he saw in that time period, but obviously something along the same lines as you. He just had something that he could see.
I think it's interesting just what you two have both said. Ultimately, we all trade our own comfort zone.
Yeah.
And I think that's really important for traders. And I know, for people who are watching this, they don't know what their comfort, some of them don't know what their comfort zone is yet, and you still have to find that. But once you find it, it's like Paul said earlier on, you stick with what you know, and you stick, through thick and thin. And what a lot of people do is they constantly jump around trying new things, when actually sticking with the same tried and tested, once you feel like you've got something, stay with it, because too many people jump around.
Yeah. I just think there's too much information out there these days. I think there's just the world of, remember back in the day, you'd get rumours on the floor, wouldn't you? Do you know what I mean? We'd get a phone call and they'd be like, there's been a rumour of an earthquake in Chile, which would obviously affect the copper price. It was literally just a rumour. Do you know what I mean?
Take hours to get confirmation.
Exactly. Take
Wait for the
hours
pigeons to fly over.
take hours to get confirmed.
It's so true.
But like now, it's just like boom, 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 and there's so much instant news, which can, I suppose, like you said, you're struggling on a short-term basis. Is it too much bloody news overload?
Yeah,
Do you
because
know what I mean?
a retail trader's pretty much got the same access, access to the same kind of news as you would, as a bank trader would have had years ago when we were on the floor.
Yeah.
I mean, I'm sure it's the same on Cymex. You were the cannon fodder when there was something like that, because all the guys upstairs would get the rumour or they'd have a screen. I don't know what it was like on Cymex, but on Life there was, I think, one Reuters feed, and so we would always be like 30 seconds behind the banks. We'd be, bash, get a load of calls, and you'd be like, oh no, go do your hedge.
Yeah.
You're like, oh, okay.
I do remember
again.
I do remember getting a phone call that's come in and it's like, oh, there's been a rumour of an earthquake in Chile. So I jumped on the phone to the copper trader at Goldman. I went, there's been a rumour of an earthquake in Chile. He went, I know. I went, how the hell do you know?
The rumour.
He started it.
Brilliant.
He started it.
Brilliant. That's true. In those days, you could do that as well.
His initials, I won't say his name, his initials were DM. And his nickname was Shaq, because he was this little Welsh fella that took up basketball. About 5'4", 5'5", and he told us. He said, we've taken up basketball. And we said, what do you do? He put you on your shoulders and run around with you on them.
Well, that question came back, Nick, in terms of, are you looking at level 2 data as well, or is it just the technical chart, like the bar chart?
It's just the price action around those periods, and it's the patterns. I think, and again, it's just being ultra attentive during that particular period. Can you see a buy program coming through, sell program coming through? I think you can. You get it wrong sometimes as well, but...
So you're not reading the tape, you're literally reading price itself.
Price, yeah.
Just price.
Right. Yeah. Just focusing on the price and how it's moving during that period. And so it's the run-up to the bell and that immediate period afterwards. Yeah,
When you're
20
looking
minutes after the bell, I'm kind of done.
Really?
Wow, that's a nice way to live.
Unless I've got a position that's going the wrong way.
What turns into an investment, does it? We've all done that.
Yeah, that's for one of the kids.
Yeah.
That's Christmas sorted.
Do you feel that you can still, even looking at just the price feed, you're still in the same mindset of, okay, I'm looking at a screen, but we're all still shouting and screaming at each other?
I try to.
Yeah.
I try to be honest. Yeah. And that's why that period.
Yeah.
Because there's lots of flow coming in.
Yeah.
And you know, you've got all the opening orders. And the other thing I kind of look for, especially when you're trading towards a high, is if a stop triggers. You know, if you can see that on the price action as well. You know, that would be of interest to me. I mean, you remember years ago when people had ticked the market one point higher.
Tried
High
that myself a few times.
I'm sure it happens out there still.
Probably does.
On the screens.
Probably
you
does.
know, as soon as you get up to that next price, there's another one going off, and you know, then the market falls away. And
Hunting those stops.
Talking of stops, so one of my first boss at Credit Lyonnais, I can say his name because he's not with us anymore, but Graham's Grace and his brother Tony, they were coffee, sugar, cocoa traders, and they were known as the Chainsaw Brothers. They would literally straight for stops.
Really?
Made a bloody fortune.
Really? So that was basically what they did?
Yeah.
Look for stops all day?
Stop hunting there.
Wow, nice. Okay.
No, that was back in the 70s when it was not quite as regulated as it is today.
Well put.
Yeah.
We get the picture.
Yes.
Plenty of elbows in the pit then.
Do you guys, you know, coming from a pit trading background, the transition from going from a floor trader over to a screen trader, so many floor traders just couldn't make that transition.
Really tough.
How did you do it?
To be honest, I was a bit lucky because the metal exchange is still open. So that in itself is it's the only open outcry market left in Europe. So that transition there, because when I left, they started to have LME Select, which was electronic, but then the floor was still fully open. You could trade an electronic, you know, before pre-market, after. So it was kind of like they're copying what was going on in the States, do you know what I mean? Where you could trade like oil at bloody 2 o'clock in the morning or whatever, because you had the overnights, and copper you had overnights. So for me, it was the way in which I was taught, because obviously my dad was a trader for a long, long time, and there was an example that I did actually want to give today, so bear with me for the next 5 minutes. I don't want to eat up all the time. But he told me when he was younger, so when he first started, he must have been on the floor probably he was about 26, 27. And there was a transitional period on the metal exchange where instead of trading in just tons, they then standardized it to become lots. Right, so back then you could trade 7 tons, 13 tons, 9 tons or whatever. And the volume on that market had started to go up a heck of a lot. So they said, right, well, we can't just trade in tons, we've got to standardise it, it's got to become a lot. So now, today, one lot of copper would be 25 tons. So he said, we're in this crossover period, and I'm sitting in the ring, and my clerk comes over, he says, Harry, buy 1,000 lots at market. So buy 1,000 lots at market, make as much noise as possible, and go and get it to close above this price. So he's gone, he can't mean 1,000 lots. That's the biggest order this market's ever bloody seen.
Really?
He must mean tons. So he goes, right, 3 months cover, 5 I sell, 500. No, you have 50. Right, 5 I give, 8 I give, bomb, bomb, bomb. So he jumps out, he goes, right, who was that order for? He said it was for Manfred. Manfred was the owner of the company. So he jumps on the phone to Manfred, he says, right, Manfred, you bought your 1,000 tons out. He goes, I didn't say fucking tons, Harry. I said fucking lots.
Wow, really?
Yeah, get back in there and do as you fucking told. He was like, shit, through the phone, goes running back in there. Copper, you know, bum, 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 bum. Right, so he's going mental, just buying everything. Doesn't even need to buy 1,000 lots, but gets, you know, bell goes ding, 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 and it's closed above this price. So he gets back and he goes, why the hell did you ask me to do that? And he went, come back to the office and I'll show you. He's like, right, okay, intrigued. And so he went back and he went, who was that order for anyway? When he was for us. He went, okay, slightly strange, gets back. So this is obviously in the 70s, right? No computers. This is all Avon graph paper, all stuck together with bloody open, high, low, close, right? And he said, look, this price here, what happens when we get to it? Right, this particular price, what happens when we get to it? Gets there, reverses. Gets there, reverses. Gets there, reverses. Gets there again, closes above. What have we just done? So on a global scale,
Triggered all the stops.
you've triggered stops, but you've also changed people's opinion of the value of that particular price there. On a global scale, he said, I'll tell you what, Harry, I'll guarantee you, next week, copper is going up. And the next week, again, this was in the 70s, and I'm like, how the hell are we going to get all of this paperwork through? So remember confirmations being sent out in the post and all that malarkey, right? He was like, don't worry about that. He said, by the time all the bean counters have done all that, we'll be out of our position, don't worry. But yeah, next week he went copper just like just straight up. And so for me, it's always been about set prices, set ranges. A range doesn't fail, a range will change value. And that will happen, especially, definitely a lot in commodities and stocks, FX as well. But for me, it's just, how do I look at that price and determine which way it's going to go? I hedge it. I go fixed stop either side, hedge, because I don't want to be the one that's going to pick a direction. But I just let the market then do what it wants, and I know the market's going to move from here. Direction for me, I don't care. It's just, you know, we make money out of volatility, right? So I don't care about the direction. So for me, going over to a screen never really changed anything, because I'm looking for these set ranges. You boys going literally from open outcry to just a screen, and that's it. Floor's dead, closed. That must have been.
I went to prison in between.
You got away lightly there, didn't you?
I was going to say that probably helped. You had APT though, didn't you, for a bit of it?
Yeah, well, actually, for me, it was quite easy at first, because I was an options market maker.
Yeah.
So I'm used to doing all the maths in my head. My thetas, my gammas, my deltas. I bought 250 spreads. You know, what's my hedge? So, you know, I got really good at maths.
Yeah.
And then suddenly you're in front of a screen. It's like, oh, buy 100 of those. Oh, right, I know what my theta is, my gamma, my delta, and you know where all the skew is, and you just press a button and the skew changes. So in some ways that was easier, really, because, you know, you didn't have to do the maths so quickly, and you immediately know your delta, so you immediately know how many futures you've got to do on your hedge. For me, though, I then got fed up trading options, because, you know, you're just married to the position forever, and you're on holiday and you're like still monitoring the position. You never get flat. So I thought I'd try trading futures. And I thought, well, how hard can it be? I've traded options for 15 years. But then it all went to pieces, because I realised it really is a completely different skill set. I had no idea what I was doing.
I mean, I remember at Rouse when they transferred over to screens. And I remember the day, because we were right down the other end of the office, and all the life boys were all up the other end. And I wore me yellow and blue today, because that was Rouse's colours. But I remember when it went over and it was all sort of transitioning. And the IT bloke had said, right, I'll put you on this dummy account here, this dummy server, so you can just get used to, you know, using a keyboard and keying everything in. And then all of a sudden, their phone just lit up like a Christmas tree.
It wasn't a dummy.
It weren't a dummy.
Oh, my.
And they were throwing size around.
No way.
The ball's just lighting up.
Wrong
And I never remember the guy's name, who was the boss.
Yeah.
But he was a fiery bastard. Yeah. And he was, what the fuck is going on? And then, yeah, the IT geezer didn't last the rest of the day. He didn't last the rest of the day. Yeah. But blimey, I remember that, and that was just absolute pandemonium.
Would be, wouldn't it?
Yeah.
I mean, as a percentage, Jason, how many people would have transitioned from life?
I think most people would have tried it. I think
successfully
one of the biggest, if probably the biggest trader on the floor was called Terry Crawley. He was just a genius. I'm pretty sure the story goes, as soon as they shut the doors at life, he went, I'm done. And he never traded again. He just went off, and I think he bought most of Kent, and and just made another absolute fortune. But then there were other people that I remember names. Oh, so and so, you know, who was worth 7 or 8 million or something. Let's say, you know, made a fortune on the floor. Oh, he'd blown the lot, went screen trading, and didn't work. So there was quite a lot of different stories for different people.
There's quite a few that transitioned to sort of running almost like brokerages themselves, didn't they, where they employed other people to
setting up prop desks. Some people had the foresight to set up a prop company, you know, that didn't exist before. But a couple of guys were like, yeah, I know, we could open a big office and we could get people to pay for desks, and that whole business model evolved. So yeah, I mean, it was like you say, it was a big transitional period. No one had done it before, and
What are your thoughts when you hear that, though, Charlie? Like, obviously, such a different realm, the pits. Because I get fascinated by it. Just hearing about it, you can feel the energy just from their explanation of it. You know?
I was lucky to go to Chicago just before the S&P pit closed, and it was great to just go and experience it as someone who's I'd never had that experience. But having heard some of the stories, I don't think I ever would have wanted to have been a pit trader. No. Well, the shagging down the alley, down the side hallways, I quite like that idea, but with the runners and the likes. But other than that, no, it sounded really rough there in Chicago, and you've got to be a certain personality for it. I don't think I'd have been cut out for it, to be honest.
That's so interesting. Because you are right there. Like, the one thing you hear is just how ruthless of a personality you have to survive in the pits. And I think it's easy for like someone like myself. I'd be like, yeah, I'd love to do that, but then the reality is so different. The pressure, the speed as well, and then obviously the errors that take place that you have to also catch up on as well. It's a whole different time, and I think that the people coming into the industry now, which will be a lot of the audience, they just won't understand that or see that. You know, even in the period from when you started trading, loads have changed. You know, so much change has happened, and as Paul mentioned earlier, like now the speed of information and what's available to even the retail traders, let alone slightly levels above them, is now just accessible all the time.
Well, I was paying out thousands a month on data and information 20 odd years ago. And now everyone's got TradingView charts for $12.99. It's ridiculous.
I go to Twitter for the news. It's free. There's some great just feeds on Twitter. On the floor, the one thing that was difficult and so different was that you had to do the face-to-face. And I was about to say how tough it was when you'd had a bad day and you had to go in the pit the next day and pretend that you hadn't lost an absolute fortune, because of course everyone would know, he's short vol, let's murder him some more. But I would imagine you've got some better stories about keeping your face when things were going wrong. Or right, for that matter.
Yeah, I don't know if I've got better stories, but it was painful, Jess.
Yeah.
You know that yourself. If you're on the wrong side of it, so I think there was, the aggressive side of the pits, but you also needed to have relationships with people.
True.
Because you relied on other people that were in there.
There was a lot of mutual respect, wasn't there?
Yeah. Amongst it was always good to be on the right side of JP Morgan and Goldman's every now and again when they came in. And obviously it's far more visual when you've got a pit and everybody's got a different coloured jacket. You can see who's doing what. So that was all good, but. Yeah, and we were talking about it earlier when we did our interview, it was constant bravado and trying to paint that face on that everything was okay.
And everyone was looking at your face, so I mean, I can't imagine what that was like.
And it's just bonkers because, I was manipulating Osaka and Cymex at the same time, so buying both. So everybody in Singapore is thinking that every time they trade with me, they lose money. And so you've got that side of it. So you've got, it's almost as if you've got to be cocky on one hand, but then on the other hand, the reality of what you've just put on and how far it's going down the drain in both locations, and trying not to break down crying and get really taken apart, because and again, it's a bit like prison as well. if you show weakness, you're going to they'll feed on you. So
yeah, for sure.
It was horrible.
That's what the old man used to say, if you think sharks have got a strong sense of smell for blood.
That's true.
It's true, and you'd be standing there in the pit with guys who were your mates. You'd go out for lunch with them, you'd go out for drinks with them, you'd even meet them up on the weekends or whatever, but they'd have no problem taking money out of you. And we knew, that's what you're there for.
Were the drinks before now non-farm payroll or after?
Well, that was
free.
In those days. Like, for example, they didn't telegraph what they were going to do with interest rates. I mean, now, everybody knows when a rate remove is coming. But in those days, remember, they didn't. Yeah. For some reason, they thought it was the Bank of England or whatever would think it was a great idea to surprise you. So we would be down the pub. We might have had a couple of pints.
Rush's back.
Bang. Bank of England just hiked 0.5%. What? I know I've already done 50 grand before I even get out the pub. And then you're running up the stairs. You've got a beer full of, a belly full of beer. You want to puke, and it's horrible.
There'll be some listening thinking,
sounds very amazing. Professional.
Yeah. Expensive beers.
Well, as an ex-floor trader, I know, and he said, we'd all go down the pub for a few beers just before non-farm payroll, just to get the Dutch carriage up. But again, I'm not recommending that to your viewers.
No.
It's a different world.
Yeah.
You know, it's a different world. And that's why it's so fascinating to me. And it just shows how, because in reality, it's such a short time period of of how much change has happened and continues to happen to this day. Like now we have such conversations about algorithms, being so active in the markets, creating, keeping it as efficient as possible, probably trapping us in these ranges for long periods of time. We have such a huge scale across the world of like economic mess and just geopolitical situations that there's a constant change like every other day. We go from like Brexit to COVID to the US elections, and it just continues. It just continues on and on. And again, that information overload, which is kind of a topic I'll bring into this discussion, which we just had, which is we were talking about how now there is so much information readily available, free information as well, like for everything you can imagine, all various topics, even outside of trading, but especially in trading. There's so much information, technology, you name it, it's available. Yet, we have not seen a change in success rates. We have not seen a drastic change in people being profitable or more consistent. And it was interesting because I had reflected on like, okay, everyone's got a huge blessing. If people want to work, they have access to everything. But equally, because they have that access, and we were discussing about how instant gratification nowadays is a real issue, it's like people take it all for granted and they're not willing to, they don't have the strong enough work ethic because it's all just there in front of them versus, just take it back maybe 2 decades or even less, where if you wanted access to some of that information, you'd have to go out and really struggle to go find it. Some information wouldn't even be available to you. And yet, they worked harder, and maybe the success rates hadn't changed, but the people who really wanted it would go and get it. While now, it's we're not seeing that. We're seeing like just information overload. And I don't know if you've reflected or had any conversations with any sort of more retail traders who are entering the space over the recent years. But is that something you've recognized in traders nowadays? Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity, from an in-house broker so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand, on top of which they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader. Whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
I think it was already touched on earlier. I think it's taken for granted, really, because they don't know any different anyway. That they just assume that, like you said, you've got social media who's going to tell you if there's an earthquake in Chile or whatever. So everyone's got access to that. Everyone's got instant information, and that really, like you say, that really has changed literally in the last 2 decades, because only around 2000 or so you'd have an edge if I was on certain platforms where you would get a nod if something was going on. That's just gone now. You're not ahead of anyone. So I think it's changed, but they in a good way, but they don't know any different. But coming back to what you're saying about win rates, well, maybe that's what people should think about, trying not to win as often. That's my That's the way that I like to look at things. Look at your risk reward more so than trying to be right as often. I think that the current retail crowd out there are so obsessed with, and I think it comes from life in general. In life, we're taught to be right as much as we can, right from education, and then you come into trading and you've got to accept you're not going to be right all of the time. And I think if people spent more time thinking about that and not obsessing about being right so much, but actually considering overall profitability, then it would stand them in better stead. Because you don't need to be right that often.
You don't. That's why I say to people, hedge. I don't give a shit where it goes. I don't want to be right. I want the market to tell me where it wants to go. That's, that's for me, that's a big thing.
That's a hell of a skill, though.
That's...
And a mindset to get to.
Well, I just say, look, level, stop there. Take profit to target is a target. You ain't always going to hit it, and they could move. But I would rather pay the market some money to find out where it wants to go. I'd much rather do that. And then when you're talking about sort of regards to news and access to news and all this stuff's going on constantly, if you can just take a giant leap backwards and just go, right, the market's going to react, don't care about direction, I don't want to fill my head full of all this news. There's so much there, and it's, like you say, it's instant, but then it's like, if I read that, and I read that, and I read that, and I read that, what ends up going on, I've got a mishmash in my brain. I don't quite know what to think. So I'd rather go, fuck the news. That
Can't
is
possibly process everything.
No, you can't. It's too much.
And whatever the news is anyway, the market will go and react the opposite way anyway.
Well, there's that, but then loads of it's already factored in anyway,
Yes.
unless it's unscheduled news, and then you just think, well, if it's mostly been factored in, unless it is something that, like you say, back in the day, well, we just do this with an interest rate and we won't tell anybody, then yeah, you'll have a quick revaluation. But for me, it's just like, I know it's coming, I know it's pretty much priced in. If it ain't priced in, I'll be quite shocked, but most of it's priced in, so just, yeah. I'd rather do that. I've always said that. I'd rather pay the money to the market for it to tell me where it wants to go, and then just ride that.
I think the summary of some of that is that there is so much news available. It's available so quickly to you these days. I kind of remember, and maybe I'm completely misremembering this, but back in the day, like 20, 30 years ago, people would try and get their offices closer to the exchange so they got a better feed of some of the data coming back. It was that speed of information that was coming back from the stock exchange.
I remember that.
Yeah, and that was where you got your edge. All right, there was a more expensive piece of property there that was closer to the exchange. Yeah, that's how weird it is. That's getting an edge.
I remember
like
that.
Now, I think there's just so much of it, and it's so readily available.
I've got a great story on that
Go on.
from the US actually, and this guy's he's still.
And these it's genuine stuff, isn't it?
Oh yeah,
really?
but this is using the postal service. This is proper slow. So this is back in early 80s. This chap, he's in his 70s now. He's still a tape reader, one of the most successful tape readers out there in New York. And but back in the day, he was like 18 years old, and he subscribes. The old investment newsletters in the US, the stock tip newsletters. So they'd always tell you how the world's going to come to an end, and then give you 4 stock tips at the end. Anyway, so this guy lived in fucking Iowa or somewhere, out in the middle of nowhere, and he noticed, he got the brain for it. At the age of 18, he noticed that he'd get his stock tips, buy some shares, and then about 2 days later, the shares would all blip up in price, and then usually a few days after that, they'd gradually fall back over again. He saw this pattern. So he thought, sod holding on to these stocks, I'll sell them after a couple of days. And he started doing that. What he realised was happening is the publishing houses, where they were sending these newsletters across the US, mostly to dentists and doctors and the likes, his little town in Iowa was receiving the mail before really? Chicago, New York, and all of that.
Amazing.
So he got hold of the whole entire data for the US Postal Service and started seeing where these publishing houses were sending the mail first, then opened up PO boxes across America, subscribing to these little penny stocks magazines and or newsletters back in the day. And then he would like literally pay someone, little runners, to phone him up, open his mail, give him the stock tips. He'd give him $5, whatever, and became a millionaire in his early 20s doing
what
this.
a great
Ended up
story.
buying a brokerage himself and became a multi-millionaire,
Wow.
but he still to this day reads tape like 8 hours a day, S&P futures. And so basically he was one of the original HFTs.
Yeah. Good story.
I was waiting for you to say you went to New York, met this fella called Jordan, and went, I've got a fucking great idea.
That's incredible. This is what I mean. Like this is what I love and find fascinating about the markets. Is there's so many different ways to be profitable. Things have changed slightly, quite drastically as well. But there's still a million different ways to make money from the markets. There's so many different markets to trade. There's so many different styles of trading, and we have that even today. Like we have obviously long term, we have short term, but then we also have like Paul's method, which is like the big thing with our episode that we did was like he was very polarizing and saying like forget technicals. Technicals no good. I know the rest of you use technicals, right? Even though some people are trying to argue that levels are technicals.
But it's historical pricing, it's historical ranges, and you know, if that's all the boys back in the day, Dad's age, you're a little bit older than me, you're a little bit older than me, but we remember, right? If you're going to look at a chart, it was a piece of paper, you know, but you can find prices. And you can carry that forward. And there's a methodology that I do use, and you'll go, it's technical analysis. Oh, it takes me to find my first range takes me about 20 seconds, and then that's it. The rest of it's just down the chart. How's the market react there?
Doesn't matter.
No, how does the market react there? And this is what I've been sort of teaching people, and they just sit there and go, fuck off, Paul. That can't work. That can't fucking work. Does. Go and do 100 charts, and you tell me that's not. And they come to me. I had one fella after doing this, and I must apologise to people that I haven't been able to answer emails and LinkedIn messages and stuff like that. I'm only one person, and it went mental, put it that way. But I showed him, and he sat there for 4 minutes, and I was like, "You all right, mate?" He went, "I can't speak. I'm choking. I'm choking up, I can't speak." He went, "That's the most crazy thing I've ever seen." And then that for me is what I said to you earlier. Can you put yourself in that mindset of, we're shouting and screaming at each other, it's through a screen, but it's just all about price, like we would all agree, it's just about price. But then how's the market react to certain prices, distances between these ranges? And what I say to people is, find out your first range, get rid of all your candles, and just come down in a price, then pull your candles back over, and then you tell me what's going on here. That for me is, I think, just gets rid of all that, this technical analysis as in what people are used to. I mean, yeah, look, we have certain TA departments are at banks, of course they are. But for me, they're just there to paint bullshit stories to send out to clients. That's all it's there for. That's my own personal view. And I do remember teaching an analyst, he worked for HSBC, but on the retail side, and he rang me up, he went, "I'm an analyst, please don't tell me to fuck off." But yeah, I don't prescribe to technical analysis at all.
But I'm going to defend technical analysis a little bit here. I'm going to have to.
You don't have to. Don't feel compelled.
Oh, no. Well, there's two things. One is you like at the banks, they'd send out the bullshit stories, like you say, from the technical perspective. They'd also do that from the fundamental crowd as well. So they put it out from both departments, don't they, really? But also, from a technical perspective, coming back to what I'm saying, I don't need to be right 100% of the time. So I'm quite happy losing 60 or 70% at the time, because I'm only interested in being right that the rest of that time, and I can still make money. So that's my defense for technical analysis. So I'm just playing probabilities and risk and reward, but I don't need to be right, whatever it is, 80% of the time.
No, you don't need to be right 80% of the time to make money. But, I mean, I just think for me, to just fill your chart up with a load of fucking lines and squiggly bits and pieces.
I like pinks and reds.
You've got to have your favourite colours on there.
especially at the weekends. But no, for me, I just like just the pureness of a naked chart and just price. That's
That's just what you're used to.
Yeah, it is.
You know, it works for you. For me, I've done technical analysis for analysis for 20 years, and I know I can find an edge most days.
Yeah.
But like you say, it's just, can you get an edge? And then, right, well, I think I've got an edge, and then you have to trade it. And of course, you don't know whether it's going to work or not, but your risk is small, your reward is bigger. That's all we can do, isn't it? Because nobody knows what's going to happen. That's actually a key point for like new retail traders who are watching. Well, I think when people first start trading, think, okay, well, I have to guess the direction every day. And it's absolutely not what you have to do. You can't possibly do it. No one can guess the right direction every day. And you know, the male ego kicks in as well. You're having to be right all the time. And it's just a disaster.
Well, that
doesn't
comes
work.
back down to certainty, doesn't it? People
Right.
want certainty
Right.
as to what's going to happen
You're in the
next.
wrong game if you want certainty.
Yeah, exactly.
Yeah.
Totally. The only thing that is certain is that there will be uncertainty.
As you said, it is just purely risk management. That's the only way to move forward.
I think one thing that was interesting, though, just off the back of your question earlier, which was in regards to transitioning to the charts. I think Paul's explanation of his was really good in terms of why he does what he does, in terms of just taking that same concept from the pits of at these price levels, we know price will get to those points, and then once they're actually broken, then we'll see price run to the next one. So it's interesting to hear that, actually, because then you're just taking that philosophy, and as you said, it was easier for you to take that philosophy to the charts.
Yeah.
And it kind of goes off the back of what you were saying, just stick to what you know. And I think that's the hardest thing for most people to hear out there, because I think a lot of people, and it's quite good to have you guys in here today for this sort of question as well, because you've worked in the institutions, you've worked in the floors, you've rubbed shoulders with professionals or had relationships and conversations with these professionals, but everyone's looking for that institutional strategy, that banking strategy. They think there's a strategy out there that creates that certainty and allows them to essentially read the market like a book. But obviously, with the wealth of experience here and all the networks and connections that you've made over the years, have you ever come across a strategy that replicates that allows that?
We wouldn't
almost
be sitting here, would we, if we had? I'd be on a huge yacht somewhere.
I think personally, we could all sit here today, come up with what we would say would be an amazing strategy, and we'd still fuck it up. We would.
Well, it's like they say, put 10 Ellioticians in a room and you'll get 10 different answers about what the S&P is going to get.
For sure.
Everyone's going to trade a strategy according to their own personality, really. You're still going to have your own little niggles towards how you want to adapt that price action or as opposed to what someone else sees. And like you just said, you've got all these people who have been successful, have come out of industry, and they're all doing something slightly different to each other. That says a lot.
That does. That actually does, yeah.
There is no holy grail.
There definitely isn't.
No holy grail at all. We'll all have different opinions about how we make money from trading, but there is no holy grail. There's no sort of defined thing, is there? That's because then every bastard on the floor would be doing exactly the same thing.
If someone's found it, they're not going to tell us. So
Exactly.
So we'll never know. But I haven't found it.
Was that ever a thing on the floors though as well, where if there was like one particular trader who was performing very, very well, that people would try and replicate or think that he had some sort of edge to himself that they could try and copy?
I mean, it's a question for Jason as well, I suppose, as Paul. But in Singapore, there were a couple of standout guys that always did exceptionally well. I mean, some guys that have done very, very well over the years.
We've got some mutual friends who, haven't we, who were exceptional.
Yeah, yeah, they were exceptional. They're very quick, and some of the things they got involved in, they were they were the best on the block at that, weren't they? And but that was their niche. And I can think of a couple of guys in Singapore. I think there's a certain amount of size always equated with that. They were willing to take down some fairly big size as well and run with their trades. But yeah, no, we've got a friend or a couple of friends who are very, very good at it.
I don't think you could possibly stand in a pit and copy them though, could you?
No.
I don't think, you can't possibly know what someone's position is in a pit.
No.
If you stood next to them all day long.
Yeah.
Or what they're thinking and how they're thinking about it.
Yeah. And they stay in the trade longer than you as well.
Yeah.
Sometimes you've got your own breaking point, and it probably comes before theirs. So.
I think the people that were the most successful, because people think, oh, trading, well, it's risky, I've got to take risks. But the most successful traders that I knew just didn't take much risk at all. They'd got it where, we're talking about Mark. He would buy 1,000 futures, no problem. wouldn't bat an eyelid. But he did that because he knew damn well he could get out for half a tick, because he knew the liquidity was there, he knew where the bid was, and he would have absolutely no hesitation in going bang out and onto the next trade. He wouldn't stand there and go, oh, it's 2 ticks against me, what am I going to do? You know, it was like a machine. Those were the guys that did well.
In terms of that, though, in terms of like people's breaking points, is that something you've ever come across within either your trading or anyone you worked with, where they just hit a plateau for a period of time, something they really had to work through, you know, when it came to their size or whether it came to their capital that they're trading with?
Certainly, I got to a size where I knew that if I carried on bigger, that I was outside of my comfort zone. Certainly, I did get to that probably around about 10 years or so, probably a bit more than that into my trading. And that can become a limitation for a lot of traders. But sometimes it's not a bad thing either to just know your limit, really, and know what's good for you. Because what's good for me at X number of lots may not be good for another trader at X, and he or she may be well beyond what I'm at. So I just got to a point and I thought, you know what, I've got enough here. Because people think, oh, they've got to keep going. But actually, there's nothing wrong with, actually, this is me. And I've found my comfort zone. So yeah, I did. It didn't just keep on going.
How about yourself, Jason?
Yeah, I think it's key, comfort zone, because you can't, as soon as you start trading bigger than you're comfortable with, your consistency will probably go down. And of course, it's much nicer to be consistent, and slow but steady wins the race. I mean, I had a problem with it because I'm a gambler, so I was always trading too big. And in the end, I was just like, what are you doing? You know, just try and just... I mean, I still do it, to be honest. I still go and do something stupid, and I really think that I'm right about something, and I'll put the position on way too big. And I know I've done it because I'm constantly staring at the phone. I'm looking at the price. You know, when I'm in my comfort zone, I've almost forgotten I've got a trade on.
You know, there's no one at the end of the phone anymore, don't you?
Oh, no wonder I can't get my orders filled.
Did you feel more comfortable having position limits?
Do you know what? We didn't really have position limits. I was a local on the floor, but I was like what was called a corporate local. So I had a backer, a really sharp American guy who Nick knows, and he would give you enough rope to hang yourself. I mean, obviously we had risk managers and stuff, and we would get a call. Yeah. And I was a gambler, so I would put on quite big positions when I thought I was right and wasn't always right. So yeah, you would sometimes get a tap on the shoulder and go, "You sure about this? You know, come on, you need to you need to cut this back a bit." But generally, yeah, it wasn't like we had position limits.
Mm. Yeah, we had position limits.
Mm.
I remember one of the fellows who used to work with, when he came and joined us, a guy called Neil Potter, he came across from AMT, Amalgamated Metal Trading, and he told a story that his boss one morning called him in. He's, "Neil, yes, position limits, yes. You're always either limit long or limit short." He goes, they're limits, they're not targets.
Brilliant.
And then he said, "Well, you know me, I'm either always in or I'm all out." And he was like, "Can you just, because I keep getting the risk department and I keep getting these phone calls and I don't want to get these phone calls. Can you just..."
That's good.
Yeah, can you just, sort of calm it down a little bit, please? But yeah, I just remember busting way through position limits. I won't ask you.
There's no point.
What's a limit?
What that is.
But no, I just remember, and you talking earlier about screw-ups as well. I mean, I just remember one copper ring, we had Chris was the trader in the ring, and we had Plan Key behind. And everyone's on phones, sell 250, sell 250, cross them. Don't think anything of it. Chris gets out the ring. What's your posse? Long 40? No. Long 540? How the fuck has that happened? Plank? Yeah, did you cross 2 buying orders? Sorry, 2 selling orders. No, he said, I said sell. He said, I said sell. Shit. Got to quietly go round then and try and get rid of your position. But yeah, I do remember those, position limits.
Is there something in your personal trading, though, that you ever found a plateau at? Or any sort of barrier that you had to work through? Or comfort zone?
No, I have a set amount of risk, and I don't go over it. Do you know what I mean? I don't go over it. I feel comfortable, same as you would feel comfortable, same as you would feel comfortable, and you would feel comfortable. And it's just a case of saying, you know, why put yourself under extra pressure when you don't bloody need to? You know, there's no point. I mean, trading is stressful enough as it is. Why add to it by going, I'll tell you what, I'll stick an extra, you know, 25% on top of this trade or 50% on top of this trade. What's the point?
That's true. How about yourself, Nick, coming into sort of personal?
You're not going to ask me about position limits, are you? Yeah, no, look, me as a retail trader now, which is where I'd probably put myself, it's about being comfortable with what you're putting on. And as Paul said, there's no point stepping outside of that. It's the discipline. You know, I still make mistakes, same as Jason said. I don't think you completely eradicate them. Hopefully they're fewer in number these days. But yeah, no, get to that area that you're comfortable with, and stay there and have that discipline.
It is fascinating in terms of...
Do you want to know what my position limit was?
Did you have one?
I did, yeah. I had 250 lots of Nikkei 225. I was short 60,000. No, I was long 60,000 futures and short 100,000 options at the end. And my position limit was 250.
So it was like buy 250, buy 250, buy 250, buy 250, buy 250.
I was buying 10,000 at market.
Were you?
Yeah.
So is that
Osaka,
a normal clip? 10,000 for
yeah,
you?
some of them.
Jeez.
5s, 10s.
Wow.
And somebody in Osaka's taking that order off a squawk box.
Wow.
You know, and then I've got Andrew Bayliss, the head of trading, phoning me up and saying, look, Nick, I'm seeing you. I've got your trade sheets for today, and there's one here that's clearly in breach of your limit. And obviously it was. And so the only thing I could think of at the time was to tell him that the system was grouping together trades at the same price. And he swallowed it. And, you know, I bought 50,000 futures that day on a 250 lot limit.
Wow.
I've got a story for you. Sorry, it's really towards Nick here.
It's a good story.
Yeah, it's all right. Ahead of coming today, I was training with my personal trainer last week, and I said, "Oh, I'm doing this thing next week," and he said, "Oh, I was doing a massage." He said for a lady. Her name's Diana, and he said, and she's in her 80s, and he said I did this massage for her 2 years ago. And he said, and bless her, he said, at the end of it, she wrote me a cheque, and the cheque bounced. And the name on the cheque was Diana Baring.
All right.
Wow.
And it was Diana Baring. So
Wow.
he said, but actually, it checked, but it was a Coots cheque. So I don't think Coots actually bounce checks. I don't know
No,
what
they
happens
do.
to
I
that.
used to work at Coots.
Oh, they do?
Yeah, we used to bounce them all the time.
Ah, right.
You get lots of people, you get lots of, couples that divorcing and stuff like that. And, you know, one of them goes a bit mad with the checkbook.
I
so.
think she's just using that. I bet she's doing that everywhere. People just feel sorry for her. He said, I didn't have the heart to go back to her and ask for the money.
You'll probably get the same check next massage as well.
I remember my old boss used to bank with Coots, Huey Leffernew, and he'd come in after a night out and, hello dear boy, yes. Had a bit of a session last night, a bit more artwork. Wrote them a cheque. Could you possibly go and sell me some of my shares? Because I think it might bounce. Thank you, dear boy. But, yeah. How did you find, because this was interesting, how did you find coming, because we kind of come from the same place, right? I'm from Essex, you're from Watford, right?
That's nothing like
Jason.
each other.
I know, Essex is way better. But coming from there and then mixing with Old Etonians and Marlborough. And
Yeah, it wasn't. I started at Coots, right? So Coots wasn't really like that. It was, it was a lot of people from, suburbia, Kent sort of area. So it wasn't quite that stark. Bearings was. Bearings was very blue-blooded. They all went to rugby or Eton, and most of them went to Cambridge or Oxford along their career path. So, yeah, look, I sat in a boardroom of a bank in South Africa years ago, and all of the senior board members were there, and the head of risk was there, and she came up with this because they were all asking me questions and whatever, and she said, the one thing I wanted to know is, what do you think was your biggest attribute in getting you to where you got within the banks that
Yeah.
you work for. And so, thinking on my feet, the only thing I could come up with, and I think it's the truth still to this day, I was very socially adept. So
Yeah.
I could mix with the guys that I grew up with on a council estate in Watford, and I could mix with the guys. I didn't have to like them, but I could mix with the guys in Bearings as well. And if you were good at your job and you got, and I was good at my job up to a point, you got respect for that.
Yeah.
And I was hardworking, I was diligent, I was accurate, and I was good. And then it all went wrong.
Yeah. I loved that eclectic mix
Yeah.
of people from all walks of life, and I'd
Yeah.
never heard anybody apart from on the telly speak like that.
Yeah.
Do you know what I mean? That was that was a trip. But I just used to love it, just the buzz.
It was so unique.
Yeah.
I actually was the other way around because I went to public school and then came down to the floor and it was all Essex boys.
That's an unusual transition.
That is an unusual trip.
Well, I was terrified, obviously. I mean, I'm sure everyone was terrified when they went to the floor, but I definitely was terrified, and I thought I don't fit in here at all. I thought I'm never going to be able to do this. Even the hand signals, I was like, how am I going to learn them? Everyone was so quick. And I literally just thought, right, I'm going to have to completely change who I am and, just to make it here. And I did. I kind of, just kind of became an Essex boy.
An honorary one.
You do though, because you end up, because everyone's Cockney down there, and you know all the rhyming slang and all that, and you end up just being like that.
Yeah.
And that was you talk like that because everyone else is talking like that.
Do you guys still miss it? It sounds to me
Oh, God.
like you miss it.
I tell you what, I miss the camaraderie.
Yeah.
That is what I miss the most. Do you miss being stressed out your bollocks?
Couldn't do it now. No.
Do you miss... You don't miss prison. Do you miss...
How do you know? It's nice and quiet.
some good mates in there.
I took a pun. But no,
It's not bad for a couple of weeks every now and again.
I suppose, yeah. Keep you on the straight and narrow. But no, I miss that. I miss the banter. Like it's going out of fashion. Do you know what I mean? Like I said, we were talking about Danny earlier. Just stupid things like that, and just
There was brilliant banter. When it was quiet, the jokes and the tricks and the pranks and everything. And
that's great. But do you?
I came from the insurance business and fund management, and I missed when I left and became just a trader from home in late 2001. I didn't realise what I was setting myself up for. The culture shock of missing out on the interaction was massive for me. So yeah, I missed it because I missed the banter and going into the office and all the meetings, just being busy with people all day long to then being on your own. It's a big, don't underestimate there's a lot of people out there who want to become a full-time home-based trader, and I always try and say, well, be careful what you wish for because it's
a
quite
lonely
big.
game.
Yeah.
It's a lonely game.
I think it's probably the loneliest game.
I reckon it is.
Yeah.
I reckon it
Because
is.
of all the emotions and the that situation that you've got to go through on a daily basis. It's tough.
it's true. You've got
Having
no
to
one
be
to fall
battle
back on.
ready.
Yeah.
Battle ready, do you know what I mean? That's what I call it. Battle ready, because it could be boring, couldn't it? You just stand around and it's like, God, there's nothing happening, and then all of a sudden, boom! And you've got to switch on. You've got to switch on. And at least I'd like that as well, do you know what I mean? I'd moan about having big adrenaline dumps, but then I kind of liked it as well, because it makes you feel alive. Do you know what I mean? I suppose sitting at home with a screen, it is different.
It was great in my 20s. I can't do it in my 50s.
You could still do it.
I couldn't. You'd stand up all day for one thing.
Well, we
You couldn't sit down for 8 hours.
we get you a chair, Jace, don't worry.
My little legs couldn't take it these days.
It is a whole different world, though. I think that's the big part of it. Like, a big part of those pit days was that community. The people that you're going to interact with, regardless of the trading side. You have that. While the retailers at home, I think the reason why the podcast does so well is simply because they are alone. So suddenly now they get to hear from other traders, and they get to hear the different stories and actually realize, oh wait, other people are going through FOMO or greed or the ego. Other people have these problems. When they're just alone and they don't really have any sense of community or know other traders, it's easy for them to think it's just them. They're the problem. They're the only ones who face these things.
Well, it's like a thing that you and I were talking about earlier today when we did the other podcast. Just asking for help and advice. I think is a key part. Because we all face different difficulties in life, not just from a trading perspective, and you need to turn around and be able to ask somebody what they would do. And if you're stuck behind a screen at home, you can't do that. So I can see why it works.
And it's true because everyone is actually going through the same thing.
Yeah.
It's all over trading, revenge trading, FOMO, trading too big, not using a stop.
Yeah.
We've all been there. Everyone's going through the same journey and making all the same mistakes.
It's funny actually you say about not using stops, and yet you speak to brokers and still 80% of their customers still don't use. And
Really?
we're saying we moved on. We were talking about earlier on how this whole trading world has moved on with all the information that we have available to us, and yet we're still primal animals and we still behave in primal ways. And that fear of loss. So people just don't put a stop in because then they don't get stopped, do they?
Yeah.
And it's amazing that brokers still tell me to this day that a massive percentage of their retail book still don't do it.
Really, yeah. Well, it doesn't surprise me, I suppose. That's why 90% of traders fail or clients fail, they say. It's
Well,
probably
they
the number
won't,
one
they won't
reason.
tell us the real numbers. Yeah, so.
Yeah.
It's the classic, is it 90 90% fail and lose 90% of their account in 90 days.
Oh, is that the one?
That's what the one.
Oh,
That's the one they say.
Yeah.
It's probably like 99. It is insane, though. It is insane. But we're thankful, I think it comes down to people's drive and work ethic, really, in terms of they have access to all the information, all the technology, everything that they could have in terms of tools. When it comes to trading, though it's is one of the loneliest games and is one of the hardest games, it's one of the probably only ones that you can do from home with, and whether it's good or bad, has a low barrier to enter. And essentially the amount of information that's available can really get to a good level, not maybe profitable, but a good level to understand what's going on and understand the markets for free. So there's an opportunity there for those who do take the right actions. But again, it kind of comes back to where we're at, I think, as a society, where there's just too much instant gratification and not enough grit. People just really don't have that mental fortitude in their everyday life, which then when they try and trade, it's just a recipe for disaster. And most of all, I'd say, obviously financial education hasn't really been a big thing, ever, even to this day. Yeah. And that's something that is kind of needed for trading, I think, because a lot of traders come in, and the reason why they're so emotional is because they don't have a financial foundation. They don't really have a strong savings. A lot of people coming in from a place of debt, which is a really dangerous place to come into something like trading with. And even if, I'll say it over and over again in terms of if you're in debt, the best thing to do is just use your demo, use simulated, use the time to build your skill, find your edge, build that edge. And yeah, it's not real until you trade live for sure, and the emotions aren't real, but at least do that whilst you sort out that financial situation. But it's just that speed, it's that instant gratification again, like you're saying, it's just that speed. They want it now, they need it now, and they come to something like trading with that mentality. It's a recipe just to not make progress and do the opposite. All that ends up happening is you go in more debt. And then suddenly every time you trade, you're thinking about that money that you already lost and then the money you want to make as well. And
Well, you get desperation out of debt in your example, but you also get people who are desperate to succeed because they hate their work, they hate their job boss, and they're seeing this as a way out. So it's still desperation, and whatever way you cut it, you won't make it as a trader if you're trading out of desperation. And you've got to find a way to have that calmer approach, because if you're desperate to succeed, you're putting a timeline on it and you've got to make this amount of money, it'll just always evade you. It'll always just be outside of your sight. So yeah, it's
that'll make you do things that you shouldn't do.
Yeah. Because it's pressure.
Yeah.
We can't trade in pressure, and so we've all just said it. We all want to trade within a given comfort zone for ourselves, and yet we've got people who want to put that pressure. I'm going to quit my job, and now they've got to pay the bills at the end of the month, and they've just had their first day of the trading month, and they've lost money, and they're already on the back foot. And I'm always trying to say to people, just take the pressure off Doesn't matter what your job. Find another job. Find another boss. But you put that pressure on yourself to trade full time. That's, I think. Let's be honest, you've got to be a unicorn to be fully trading with no other source of income full time. You've got to have a lot of experience and a lot of money behind you, and most people don't have either of those.
I was going to say with the instant gratification thing, that's through technology these days. And, do you know what I mean? Kids these days, we're going to sound like a bunch of old farts, but kids these days, it's a totally different bloody game. I mean, come on, we're all 70s, 80s kids. We had patience. You know, patience.
Talk about mindset. We had mindset because you'd have to sit on a bus. All you had was your own thoughts. So when you went to the loo, you actually just went to the loo, and you had your own thoughts.
We didn't tweet. We wrote letters.
That's so true.
When you sent off for something, you had to wait 6 weeks for it to arrive.
Or when you took photos, you had to go and wait a week for the photos to be developed.
Exactly.
It's crazy,
Right
isn't
now,
it?
your viewing numbers are going right down.
I love it.
All the older ones are going to stick with
Yeah.
us.
No, but it's the thing though. That's why it's so important and that's why I was so excited for this one, because even with me, I really grew up in like the transition, like really in the transition. Like I had dial-up internet, so I didn't know before internet, but I had dial-up internet, you know. But like people, I mean, people.
We had phone boxes.
I know.
So true.
No, but like, I mean, people now who don't even know what dial-up is.
We had phone books.
And even that's shocking to me, right? But yeah, like it's interesting, and I know everyone at home, even for people who don't know or understand those things.
Don't. Do you remember seeing your first fax machine?
Yeah.
And faxing
I like the phone box thing though, because if you went to meet a mate for lunch, you know, and they didn't turn up, he's like, well, how long do I wait for? You'd call his mum. Did he leave?
Yeah.
You know, it's so true. We
Am
had
I
phone
on
boxes.
am I on the right phone box?
So yeah,
But yeah, no, I mean, I remember
The amount of telephone numbers you had in your head.
that's so true.
Yeah.
See, that's a big thing.
Yeah.
I mean, literally.
There's no training in memory now. Like no one needs to remember a telephone number,
Correct.
an address,
Yeah.
directions. Like I know people in my own city where they're just coming to my house, and surely they've been there like 20 times, but they'll still put on maps, they'll still put on Waze, and still if they don't put it on, they'll still drive past my house. And I don't know how that's possible.
My kids don't even exchange phone numbers with people. They're on Snapchat or whatever it is.
Yeah.
Can I have your Snap or your Instagram or something? They don't even. So I'm so left behind.
I can't wait for the title of this little chapter. This is going to be Old Farts
Four old
Reminiscence.
But they won't be clipping this bit up.
What's that one they used to do in Yorkshire? That TV programme, that's what they should call it.
Yes, Last of the Summer Wine.
Last of the Summer Wine.
Well, we had a geezer.
I think they're all dead, so we're taking over.
Well, yeah. So we had a geezer on the floor that used to work for Revco. He come from Yorkshire, so his nickname was Compo. I remember just turning up and going, what, you can put a piece of paper in there and press a button and it comes out in New York. Yeah. That's fucking crazy stuff. That's crazy stuff. You know. But I remember having to do that. One of the first jobs when I was at Rouse was go and get all the traders to put all the forwards on a piece of paper, write them down, and you literally had to manually send that out to every freaking client in the morning, just so that when they got there, they had something to sort of work off. You know, obviously spreads are going to change throughout the day, but something to sort of work off. And it used to take fucking ages.
You had to send it one at a time.
Yeah, one at a time. It used to take ages, and you'd be like, literally half an hour, like, oh, God's sake. Yeah, but then email came along, and I mean, all them older boys were just, what the hell's email?
The fax guy got sacked.
Yeah.
Well, that's what a lot
I
of
got
people
promoted.
They're the choices. You know? They're the choices.
Yeah.
One thing that really resonates with the amount of traders I've spoken to. Whenever I've spoken to them, they've always blown up. Every single trader I've known has always had a blow up moment or a really low moment in their trading journey, whether it's from losses, whether it was from blowing up their account, whatever it may be. But that was the thing that taught them. A lot of the time, that's what they can attribute to their success. The lesson came from that, or one of those moments. Sometimes it's multiple, but one of those moments that allowed them to say, okay, that's how they found their comfort zone. That's how they found out, I keep doing that and I keep losing my account. I need to change. It was the thing that either hold them accountable, but equally there's other people who've obviously probably not come on the podcast because they're not trading anymore, but probably had those moments and left. Can any of you share or speak on maybe one of those moments for you and what lesson came from it that allowed you to then
You have to start, Nick.
progress up?
There's no point me. You all know mine.
I was going to say, if you don't fuck up, you don't learn.
Yeah.
Do you know what I mean? You have to get things wrong, otherwise it's just, or you have to recognise it in yourself as well. That's a big thing. If you know that you're, I don't know, you get excited really easily, or you panic really easily. You've got to try and get a grip of yourself, and just try and be as serene as you possibly can. But we've all fucked up, some more than others. We've all fucked up, but it's God. Cock-ups made on an open outcry floor. Some of them we've had. So I won't go over the story again because I told it last time. But yeah, if you can't buy it, you can sell it. Oh God, that was brilliant, absolutely brilliant. But yeah, from a personal basis, yeah, screwed up, lost money, been impatient. Going from, I think the biggest thing for me was going from having all the information and all the order flow around you to not having it, and sort of then recognising, right, hold on, I've lent on that a bit, and now I haven't got it, and you screw up, and you have to change the way in which you do things, because that is going from around a bunch of boys and girls to being by yourself. But yeah, if you don't screw up, you don't learn.
It's true.
I definitely had a light bulb moment in my trading. Yeah, I'd blown up early doors like everybody. And then I'd got into a part of my trading where I could go for a whole year and not make any money. Well, this went over a period of 2 years. Just not making any money. I'd got to the point where I wasn't losing any money anymore, so I knew something was okay. But my equity would just go up and then pull back down again. And really, all it was emotions. I was getting overconfident. I was a greed-based sort of individual trader. And as soon as I had a good winning spell, I'd then start trading a bit too big size. And then the equity would come back down again. Then I'll tighten back up, go back to my rules, get a bit more disciplined again, and then gradually the equity would go back up. But I'd keep repeating the same mistake, because over a period of a year, you've forgotten that 4 months ago you got a bit greedy, and now you're in that whole greed zone again. And I would repeat the same cycle over and again. And then it really was just a big old review that just brought this light bulb moment, really, to think, okay, no, if I just can maintain that discipline that I have when my equity curve is down here, and keep that discipline when I'm starting to feel that overconfident, then maybe my equity can break out. And so that was really the aha for me. It was simple, but it wasn't the blowing up, because we've all done that. And, if you get past that, then you've got a chance. But I still had to overcome.
Did you have to just zoom out and look at that period of time? Is that how you sort of observed that?
Yeah. Because you do forget. If you don't go back and review, you very quickly forget. And I was quite enjoying it. I was just a part-time trader at that point. I just enjoyed the process of trading, enjoyed being involved in the market, and then realising, hold on a second, I can make more money than this, because I've proven it to myself. But then I seem to just start thinking, well, it's only a bit of profit. I'll use some of that profit on this trade here. And then that doesn't work out, so then you start trading a bit faster and revenge trading, and then the whole cycle repeats itself again. So it was a simple thing, but it was a massive thing at the same time.
Definitely. How about yourself, Jason?
That's going to resonate with everyone. That I can't really add anything to it. It's just spot on, and I think everyone goes through it. And even to this day, I still put trades on sometimes, and they're bigger than they should be. So. But yeah, I'm sure everyone goes through exactly the same process.
Definitely. An amazing thing that's, with the wealth of experience around this table is that you've all been through different market cycles, like bull markets, bear markets, ranging markets. Like, is there any particular things that you look at or look for or do when you're experiencing a change in market sentiment? When it comes to strategy, is there a change in risk? Do you have to just step off the gas completely and take times out? Anything along those lines when you're experiencing or noticing any changes in the markets?
I'm a trend trader because it's just the easiest way to trade. So, for example, I talked about gold earlier. That's been great, and almost maybe it's a bit cocky to say easy, but it's not hard to find opportunities, put it that way. I struggle with the sideways trend. I'm not a scalper, so I have to be. I've become quite quick at spotting when the market's moving sideways. That's something I'm quite pleased about. And then I realise I'm going to struggle, basically. Yeah.
So then you just step away from those markets?
Yeah,
and
yeah.
Well, how many pairs are you looking at? Quite a diverse amount of pairs, right?
Yeah, because I have a service where I provide signals every day. So, at the moment, in order to try and find signals, especially in Forex, I'm probably looking at as much as 30 pairs. So that's definitely a problem. I don't want to have to, but I don't trade every day at all. But because I try and help people, then I am looking at that many markets.
How about yourself, Charlie?
There are times in the market when, look, nothing's ever 100% ever, but there are times in the market where you do feel you're more in a comfort zone, coming back to what you're saying about gold over this period. And for me, it's when sentiment is high in a given market. So if you take the spring of last year as an example, and you think back to the S&P and the US markets at that point, we'd just come back off of, we'd made the lows in October of 22. And so we're now in April, May of 23. And there's still a huge amount of pessimism out there towards the stock market. Everyone thinks, oh no, this is going to be a much bigger bear market. Paul Tudor-Jones has come out in the January of 23 saying, yeah, I've got my recessionary playbook on and all of this sort of stuff. And then you go and look at the COT report, and you look at the futures market positioning, which was massively short as well. And yet you've got the S&P, talking of ranges, just nudging that range. It kept on bobbing up. I can't remember what the level was right now. So I was just buying the breakout. And so when I get that overlap of sentiment where you've got a huge amount of pessimism, but the market technically isn't respecting. The market's trying to break out, and you've got all of this negative sentiment. That to me is a lovely combination of things that I'd love. You don't get it all the time, unfortunately, but when it does come, it's
don't miss it.
I think sometimes you just got to stay out. I think if you look at the period where we are right now, obviously we've got the US elections, less than 2 weeks.
God, is it?
Yeah.
Wow.
Less than 2 weeks. It's all kicking off in the Middle East, and then we've got a decision coming from the Fed. For me, I'd be like, there's a lot of uncertainty there. Don't know who's going to be the next president. Not quite sure what's going to happen in the Middle East. Sometimes I think you just need to take stock where you are in space and time and go, market's going to be there when the uncertainty's disappeared. So I think, it's just having that mental discipline, isn't it, to just realise and go, yeah, regardless of if I step away and take a holiday for 2 or 3 weeks, it's going to be there when I come back and turn the screen on.
Yeah, that's good advice.
Yeah, I think Paul makes a great point there, but it doesn't really apply to me so much.
That's what I was going to say, yeah.
Because I'm just trading that specific time frame. So, like I said, you can get caught on a trend within that time frame. It doesn't happen that often. But yeah, no, I'm just focused. That time is going to be there every day anyway, and there's going to be movement. So it suits what I'm doing at the moment.
Business has to be done, doesn't it?
Yeah.
I think that's because I said this last time. I was just thinking, in the retail market, people don't know about market on open, market on close orders and stuff like that, and they kind of never think to incorporate that into.
And as much as there's not supposed to be any stop hunting, and there's not supposed to be any spoofing before the market opens, there's still plenty of it.
Yeah, I'm not aware of that. There is
100%.
So that is what helps you actually by big.
Does a little.
So hang on a second. So all your experience allows you to spot that. Is that what you're saying?
A little bit.
Yeah, really.
A little bit, but yeah, like the run up, the 20 minutes before the Dow opens.
You get a real good feel for it then.
Yeah.
Okay.
And it tends to turn at a certain point.
Okay.
As well, so.
Okay. Well, that's
it's
experience.
just the patterns as well.
Yeah. I mean, you couldn't teach me that. I would imagine that's just something that you probably
over
don't
time.
even know what you're seeing. Sometimes it's just like a sixth sense, is it?
I don't know if it's a sixth sense. There's definitely patterns that you can see.
Yeah.
It's a bit like, I guess it's a bit like when, what we said earlier on, you get people reading the tape.
Yeah.
And there's patterns within that.
Yeah.
But to most people, it's just gobbledygook
Yeah.
when
Yeah.
they're looking at the orders and talking of spoofing and all of that going on. But yeah, it's amazing what you can do. I'm sure when you're just sitting there seeing the same thing day in, day out.
And expecting it. That's the thing. You expect to see it, don't you?
Yeah.
You know, and it's if it ain't there, then you're like, something's up here.
What is your thoughts in terms of intuition? Like when it comes to that gut feeling, you know, when it comes to a trade, it might not fit absolutely to the mark when it comes to technicals. They might not fit absolutely to mark to the fundamentals, but you have this gut feeling about a trade. How much does that play into your trading, if at all? Start with Jason.
Loads, I think. I think you can read all the books in the world and you can trade all, and study, well, from my perspective, technical analysis and really understand all the patterns and everything else. But until it's experience, there's no question.
Is that where it stems from, you think?
Yeah.
Experience?
Yeah, big time. I think you just get a gut feel for it.
It's like everything in life, isn't it? You know,
Yeah.
My son's a footballer, and the longer he plays football, the more he's just got a feel for the game. I think it's sports; it applies to everything.
How yourself, Charlie?
Yeah, well, gut feel for me works in two ways. Sometimes gut feel or experience, I can have everything lined up and I think, oh, this is a sure thing. And it doesn't work out that way and it just rolls the other way. And I can be the other way when in my gut, I really don't want to take that trade, but I know that technically I've got to take that trade because it feels like I'm going against the overall market sentiment at certain times. And yet they become the best trades. So
true.
yeah, the ones that sometimes I think are going to be the best trades don't turn out to be, and then the ones that I don't even want to put it on, but you just know that you've got to because I've got to follow what I'm doing.
Fits your criteria, your strategy, so you have to do it. Yeah.
And then you look. For me, I'll look back a month later and say, that was the right entry point. But
Are you someone who's like strictly mechanical with your trading?
No. Discretionary, I'm taking in, like I've already mentioned, market sentiment is important to me. I think market sentiment in gold right now is getting quite interesting because it's getting all the attention right now. So it's starting to, I've got some views on gold, or I'd love to see it get to 3,000 in the not too distant future. We've got seasonality is on its side at this time of year as we're coming into the end of the year. But it concerns me that there's a lot of chatter towards gold at the moment out there. So when that happens, it doesn't necessarily mean a top's imminent right now, but it starts making me look at, that it may need a pause soon.
That's interesting.
Goldman want it to go to 3,000. JP want it to go to 3,000.
Go to 3,000.
We know what happens after that, don't we? Because that's what they said when it got to 2,000.
Yeah.
So I think there's plenty of that going on.
Yeah.
Plenty of that going on. I think it's out there, and I reckon it will get there. I think the fall away from 3,000.
Yeah. It's just I get nervous when there's every article out there is talking about gold. It was no different in 2011.
No.
When all the gold kiosks were propping up in your average shopping centre.
Yeah, that was.
Yeah.
And I remember I was on a webinar at the time, around that time, and I said I think gold's topped, and I got absolutely slated by the retail out there because they didn't have crypto back then. They were all into gold and silver. And they were slating me for it. It had already topped it. It was about a month after the highs that had been made. And I was listing off all the sentiment at that time. I said, look, it's just way too frothy. And then I said, well, the very fact that you're all berating me, saying that gold's going to $5,000 and all this, I said, gives me even more reason to short. And then they're going even more nuts at me at that point. But so sentiment to me is an important gauge at certain times in the market, and I think gold's going to be really interesting actually.
I think you're right. It's like the shoe shine. What's the shoe shine boy story? The old the stockbroker. He went and got his shoes shined by the same kid every day or whatever, and then one day the shoe shine kid said, "Should I be buying the stock market?" And he went, "Oh shit, it's time to sell it." Something like that, isn't it? It's an old story.
Yeah.
The old man who's been the bunker hunt. You ever heard of the bunker hunt brothers?
Yeah, of course.
Yeah, bunker hunt brothers when they're trying to call the silver market. And the old man said, I remember getting out Fenchurch Street, and walking down, there's only bloody people queuing up outside jewellers
Oh, really?
with the family silver.
Really?
trying to sell it. I mean,
Wow.
and that's an amazing occurrence that happened there.
Yeah.
When-
It's a big signal.
Well, that was the thing. The old man said, because he was trading, so LME actually had a silver contract then. Wasn't as big as the bullion market and COMEX and stuff like that, but they wanted to be involved, and he was trading silver as well. And he said that was one of the most craziest things I've ever seen when COMEX changes its own rules. You cannot buy silver in the spot month on margin. Didn't say you couldn't sell it. Didn't say you couldn't sell it on margin. So that was just it. Bosh. Crazy. Crazy.
You'll have to reconvene this in a couple of months and see where gold went
Yeah.
and
Yeah.
where it currently is.
2,998.
Yeah. Well, if we're all doing it from a beach from Marbella, we'd be all right. wouldn't we?
That's it. What are your thoughts in terms of risk? Because there is a lot of debate. It's very interesting. Anytime that anyone on the podcast or generally out there talks about dynamic risk, a lot of retail traders and a lot of general sentiment is, oh, you're a gambler if you use dynamic risk. And bear in mind that they never say, in terms of dynamic, they never specify, like, I'm talking 20%, 30% risk. They're just saying dynamic, that's all. And I know some really good professional traders. Most of the professional traders who have verified track records say that dynamic risk is really important to them to get the big returns. Doesn't mean that they can't be profitable with static risk or fixed risk, but the dynamic nature, when they have that gut feeling, again, going back to that gut feeling, and they feel that that's that A-star setup to size into that trade, allows them to create those, much higher return years and months, etc. What are your guys' thoughts? Do you guys have like more static risk or dynamic risk, or what's your thoughts around risk?
Static risk for me, because then I always know where I am.
Yeah.
I think if you start to change your risk, then you open yourself up to more risk, because if the trade's going against you, you think, oh, fuck it, I've got to give it a bit more room. The way that I do it is I hedge, so I don't give a fuck what it goes. But, do you know what I mean? That would be, if that was me, I would, using a dynamic risk model, that could get you in a shitload of trouble. Because, like you said, nobody wants to be wrong.
Yeah.
So it's, when are you going to admit that you got that call totally wrong? Is it when 20% of your account's gone, 30% of when your account's gone? How far are you going to let that go before you should be getting a call from the risk department going, what the fuck are you doing? But I think as a retail trader, you have to be your own trader, you have to be your own analyst, you have to be your own risk manager. And I think that's a lot of people struggle with that, because that's quite a few hats to take on, isn't it?
Actually, I've known bank traders who are really great, did really well in the bank, and then they thought, right, I'm fed up with the bank, I'm going to trade from home, and couldn't do it because they had all that there.
Yeah.
All that whole support system. And
Yeah.
then when you've got to do it yourself, they really struggled.
Yeah, when you know that you're going to get a bollocking from the risk department and you can put your job on the line.
Yeah, and it's not your
It's
money.
accountability
and it's
Yeah.
not your money. Yeah.
I do vary my risk depending on what I'm seeing, but it's not, I've still got a stop loss in the market, so it's, I've still got an overall cut-off. But I'll work within a risk range. There are certain trades I would rather just, I use the expression dip my toe in the water with. So I'll dip my toe in the water and then I'll build the position over a bit of time. And then there'll be other trades where I'll just go in at full risk, max risk straight off. So I do vary my risk a bit. But for most retail traders, I'd say, yes, static risk is probably better for them, because if they're risking, let's say, 1% on a trade of their account on one trade and then 0.1 on another, they're bound to get it wrong. The one that they risk 1% on will be a loser. The one they risk 0.1% will be a winner.
So
never, So I think it's something which earn the right to do that sort of thing. I don't think it's something to do straight away.
How is that?
Just with the style of trading that I do, it's static. But, you just get used to, again, everything that everybody said all the way through, you get comfortable stuff. So you get comfortable with trade size. I stick to the same trade size, so the risk is very static.
One of the final questions for you all is, I think it's a very important one, because I get it quite often from the general audience. There'll be quite the common theme of asking, what is the definition of edge? What does edge mean within trading? Maybe it looks different to everyone, so it'll be good to go around everyone, like what your thoughts are in terms of what is the definition of creating or forming an edge, and what would that look like to you? Start with you, Paul.
An edge. I don't think anyone's really got an edge. I think you either, and this is going to sound like I'm a right prick, you either know what you're doing or you don't, I think.
Do you know what I mean?
You know what, I ain't fucking said it all day.
I've said it twice now.
You said I have to get you one. So it's your address.
Can you sign it first?
Yeah, I ain't taking this one off. Get my nips out. No, but I mean, an edge. I don't know. I think because we've got real life experience and we've been on floors, it's not, we wouldn't turn around and go, oh, I've got this edge, I've got this edge. It's experience for us.
Yeah.
That someone else might say, well, that is your edge then, I suppose. But because we've actually been there, seen it and done it, it's a different experience. It's a different experience for Mr. Jones or Mrs. Jones or whatever. How do you find it? Difficult for me to say. Really difficult for me to say. Because it just, blimey, this is what, nearly 31 years for me.
It's interesting. We're not sitting here all leaping and talking about something technical as an edge.
I would. That's how I find my edge. But anyway, sorry, carry on.
Well, you go there.
Well, I mean, my approach is technical. So my edge would be so simple. It would be like, gold's in a bull trend. When it pulls back, I'll throw my tools on there and look for a support level. And if the first one doesn't work and it hits my stop, I'll try the next one, and it's just simply a case of I'm expecting the bull trend to resume, and eventually I'll buy it, and it'll turn, it'll go up, and I'll make some money. That's it. It's dead simple.
You see, I would, but there's a psychological edge there, because you've just said, if I get stopped out, I'll look for the next level and I'll go in again.
Yeah.
Your average retail trader won't do that, because my edge is, I would say, I've got so used to taking a kicking from the market over the last 25 years or so, that I've got used to taking that, so I can get back up after the market's battered me and not react like a normal retail trader would do. So to me, that's my edge now, because the next trade that comes along, like you're just saying in gold there, might well be lovely. The next you've just got the next trend-based trade, but you've got to take that next trade.
Yeah.
And if you've just had
That's
a
the thing,
kick,
you
you've
have
just
to
had a
take
few
it.
losses.
Yeah.
That's the edge.
Yeah.
I'd add to that. I think we have got an edge because I think we've got used to losing money for a lot longer period.
I'm certainly used to losing money.
But do you know what I mean? And that's not taking the piss out. It's not taking the piss out of anybody. But it's just, it's because we've been,
You can keep your T-shirt.
Yeah. You still want one.
We've survived. We've lost money, but we've survived, and we've bounced back.
We've done it
Okay, maybe that's
from
a really good point.
a longer period of time.
Yeah.
And the other thing is as well, I mean, talking about losing money, he's still on the trading floor now, so I won't say his real name, I'll just give you his initials, GC. I remember him when I was at Rouse, he's our copper trader, right? And he thought he was going to be Billy Big Bollocks, right on the close. Yes, he's Bugsy from Barclays. He goes 1,000. No. Bugsy, father sell, free sell, other sell, 8 sell. And he lost £1 million in literally 10 seconds.
Yeah, wow.
Right? As a retail trader, that would kill you. What did we do? It's all right. Pub now. Do you know what I mean? Get over the pub and you can put your arm around somebody and go, like, he's going to fucking need to be picked up a little bit here because he knows his job's on the line. Do you know what I mean? Everything like that. So it's, but that's getting, then has to get back in that ring after doing his bollocks, and he's got to do his job.
That's true. Yeah, actually, that's a flawed thing, because I could give you 2 or 3 stories where there was an election back in the early 90s, and I think Labour was supposed to win, and they didn't, and the Tories got in. We got in early, obviously, because it was going to be a big one. And my clerk came up to me. I think the market opened at 7 o'clock. It was earlier open because of that. The clerk comes up to me about 10 to 7 because you've got an out trade from yesterday. And I was like, what? I looked at it and went, fuck, I'm down 100 grand and the market's not even opened. had to call my boss in Chicago. I'm like, Roger, I'm down 100 and we've not even opened. Yeah, so I suppose 3 decades later, I'm still trading.
Yeah, and that's the thing. I think you just, I think that is the different thing, that you have to get back in there. You can't not trade.
Yeah.
You have to do your job.
Is there any position, just to finish up on, it's a bit of an interesting topic to finish up on, but off the back of that, is there any sort of characteristic or, scenario where you think people, if they're not making those changes or not making changes and they keep making the same mistakes, that they should just quit? They should just quit trading? Because I know a lot of people don't talk about it, but I think it is important, because I think a lot of people get mis-sold trading nowadays, maybe even in the past as well, but especially nowadays in terms of a certain lifestyle, a certain way of trading, a certain lifestyle that trading will bring, and therefore they get caught up in that vision, when in reality it's not like that. Like, hopefully people tuning in today will hear a reality of trading, Yes, we've talked about some highs, but we've really talked about the reality of the journey.
Yeah.
But most people don't hear that, because they're just by themselves and all they've seen is like a YouTube ad or an Instagram ad.
There's that, isn't there? And the FCA is also coming out now and cracking down on celebs promoting things.
Yeah,
you know what I mean? And stuff like that. And I guess in a social media world, you're going to have that in front of your face all the time. It's going to put those pre-connotations in your mind about, this is what it must be like, and it must be all this, and it must be all that. I mean, yeah, if you do well in the city, you get paid. You get paid to do your job. But, it's a job. It's not a lifestyle, is it? I suppose. You know what I mean? You didn't walk into the city going, I want a Ferrari, I want a yacht. If it happened for you, it happened for you. If you did well and you were good at your job, you'd get it. But if you weren't, and definitely you two can attest to that, how many people did you just see turn up, couldn't do it, and went?
Lots.
Yeah, loads.
You think you have to love trading? Like, you have to love the art of the markets, that buzz of seeing, the movements and the fundamentals and all the different moving parts. You have to actually enjoy that passion.
I think you have to hate it, right? But still come back to it and go, you bastard, I'm gonna do it this time. I think you have to. That's the thing. Love it, yes, but also
you have got to love it. If you don't love it, you won't come back the following day.
It has to be an obsession.
Or you've got to be
doesn't it?
passionate about.
Yeah.
People get into it for the flash yacht and the cars and all the stuff that they see these days on social media. And I understand everyone gets into the markets to make money initially, but you've got to learn to be passionate about them. You've got to enjoy it like a hobby or like a sport or whatever it is. Because if you don't, like we just said, when the market gives you a kicking, you are not going to come back. So you've got to. And if you're not passionate about it, you might as well go and do something else.
Absolutely true. Yeah, I think, it becomes an obsession. I can't imagine waking up one morning and not knowing where various different markets are and having a day where I just didn't know where something was. You couldn't do that, could you?
No, we had that conversation earlier when we were talking. It doesn't leave you.
I've got a question for you too, just quick. Do you still have dreams about being on the floor?
I do.
I mean, not
Do you?
real dreams about being on, because I bloody do.
I do. And they're always bad dreams. Honestly, they are. Honestly, they're always bad dreams. I literally had one last week. I dream that I don't know what my position is. I can't get my clerk to run a position off.
Yeah.
And stuff like that.
Yeah.
See, I don't dream a lot anyway, so that's... But I did used to have a dream in prison when I was there, sleeping on the floor, and I'd wake up in a cold sweat at night, and somebody had turned up from Bearings in London and said, look, we found the 5/8 account.
Really?
But it's okay, don't do it again.
Really?
Wow. I did it again.
You did it again.
In the dream.
In the dream you did it again. Because, but there was a stage, wasn't there, where you actually got it all back?
There was, yeah.
And then you were like within 250 grand of it or something, and you could have walked away from it.
Yeah.
Yeah.
It just wasn't strong enough to walk away from it at the time.
Well, I mean, that was remarkable to have got it back to almost zero.
It really was.
Because I still have them. And I wake up and I think...
Probably have one tonight.
Yeah, I think that they're good, but do you know what I mean? I mean, I
can't have a good one where I make a fortune and I go and buy that Ferrari.
I had one the other week and I was complaining to the geezer standing next to me. Oh, the fucking acoustics are shit in this building.
Really?
Yeah, Can't hear anything properly. I was in the middle of a dream. But no, I just wondered because I thought, is it just me?
I think that one was you just getting deaf.
Yeah, probably in my old age.
That's a sign.
Mrs. keeps telling me the same thing.
That'd be lucky because you've got a newborn on the way.
On the way.
Being a bit deaf might be an advantage.
Yeah.
Yeah.
I got away with it with the last two as well.
Any final questions for each other at all? Anything prop to mind?
Blimey. Yeah. Favourite pub?
Favourite pub in the city.
In the city.
That
Because you were at
was,
Dowgate Hill, wouldn't you? So what would have been...
Yeah. Oh.
Or do you remember Fuego's?
Fuego's, yeah. I didn't go there much, but I do remember it.
That was not the go-to place to go, was it? That was
No.
everywhere
College
else is
Press.
closed.
That was the one at Life, because it was the closest one. Actually, good story. So we moved from the Royal Exchange to Cannon Street.
Yeah.
And I don't think anyone in the area of Cannon Street knew that we were moving. So we've all, we've gone up one day, all the jackets. So of course, it's like, right, beer, let's go and find a pub. So everyone steamed into this place called the College Press.
Yeah.
And it was probably fairly quiet before we all turned up. And this guy, Frank, lovely guy, Frank, he owned that and the cafe next door. He had no idea that this exchange was coming in with 3,000 drunks.
Yeah.
And I tell you what, I bet he made more money than almost every trader on the floor.
Yeah.
I mean, you imagine the Life floor moving in next door and you're the closest bar
Yeah.
and cafe. I bet he made an absolute fortune.
Yeah. Yeah, we had a few.
Lovely guys as well, lovely guy.
We had a few of them. I remember the first pub my dad took me into in the city was the Wine Lodge on Fenchurch Street. And it was opposite where the market when it was on Fenchurch Street. And my initiation into who are all of these people, because it literally just took me down there for the first day. And so we're down, it was upstairs and the downstairs, so we were all downstairs, and there must have been about 100 of us. First suit, everything, right, first tie, shoes, everything's all prim and proper. And this fella, who I would later learn was Chris Dole, come running down from upstairs with a bar stool on his head, right? And the ceiling came down, as you came down the stairs, the ceiling came down low. So he's come running down, bar stool smashed into the ceiling, he's let it go, he's come running down the stairs. Another guy called Trevor, they'd been out and on the common all afternoon. And I remember looking at him, and I thought, he's a fucking nutcase, who's that? And the old man's having a beer at the bar and he's nattering away. And then he makes a beeline for me. And he goes, who are you then? I said, my name's Paul, I'm Harry's son. And he went, right, young man. Picked me up by my jacket, and he goes, now this is in the 90s, right, so we know what hairstyles were like, right, in the 90s. He goes, I've got one word of advice for you, young man. I was like, right. He went, get your fucking hair cut. And then put me back down again. And my dad is standing there watching, pissing himself laughing. And he comes over and he went, well done, son. He says, you've been doled on day one.
No.
Best pub?
Don't know really. I mean, when I was at Bearing Securities, we just used to go to the Minories a lot.
Yeah.
Oh, Minories, yeah.
Minories,
It was a Friday. That was a Thursday night.
Was there one called the Cheshire Cheese as well around the corner?
Cheshire cheese, yes.
corner.
Simo's. Did you ever go to Simo's? Simpsons.
Yeah.
Simpsons.
Yeah.
Simpsons.
Yeah.
Stewed cheese.
No, I don't know that one.
Stewed cheese is on Cornhill.
He used to
No,
do a
don't
crawl
know it.
every day.
No.
Just all the bars. You know, the audience are going to have a list now. It's going to become a thing when they visit
Simo's
London.
is closed. It's a city institution. It was opened in 1747. There's a big legal battle going on at the minute.
Even older than us.
Yeah, just about. But no, stewed cheese.
Simpsons, yeah, there's a legal. I've seen that. Yeah.
Yeah.
Yeah, I think it's
Yeah,
been tracked in the Life group.
the old man lived in there.
I think it's time. What an absolute pleasure. Thank you all for being here
Thank
today.
you.
It's
Thank
been
you.
an
Thank
amazing,
you.
amazing conversation. I know I kept you all nice and cold
Yep.
in our warehouse.
a bit.
It's cold.
Hope you're bringing some cold beers in now then.
Well, we have. We'll talk off camera. But everyone, thank you for tuning in. A huge thank you as well to all of our guests, Charlie Burton, Jason Sen, Paul Scott, and Nick Leeson. Their links will be in the description below, so make sure you check those out. I'm looking at the wrong camera, I just realized. But hit subscribe. Other episodes are on screen. And until next time, Take care.